Surviving the 2023 recession. Smart investment strategies to thrive in economic downturns. With the 2023 recession looming large, are you worried about your financial future? Well, fear not. In today's video, we'll discuss the smartest investment strategies to not only survive, but thrive in this economic downturn. The strategies we will reveal have been time-tested and proven to work in past recessions. So buckle up and get ready to become recession-proof. But before we do dive in, make sure to hit that like button, subscribe to our channel, and hit the notification bell so you never miss out on our valuable insights. Section 1. Understanding the 2023 recession. We're about to embark on a roller coaster ride through the economic twists and turns that have led us to the 2023 recession. It's a labyrinth of global economic slowdowns, soaring inflation rates, and geopolitical tension that would make any James Bond movie plot seem like child's play. Imagine the world's economies as a meticulously balanced set of dominoes. Once one proverbial domino falls, say a global health crisis or a political upset happens, it sets off a cascading effect. Before you know it, we're in a recession. In 2023, the dominoes tumbled due to a cocktail of diverse factors. Yet in the midst of all this chaos lies the silver lining, a chance for savvy investors like you to find opportunities and secure your financial future. Section 2. The importance of diversification. Think of diversification as a grand buffet at a lavish party. Just as you wouldn't fill your plate with only pastries, you should not pile all your money into one type of investment. Diversification is your financial superhero, swooping in to save the day when one part of your portfolio stumbles. A well-diversified portfolio is like a well-balanced meal. It provides the right blend of nutrients, or in this case assets, to help you weather any economic storm. We're talking about mixing up stocks and bonds, introducing real estate to the party, and sprinkling in some gold or other precious metals. Each asset class dances to a different tune and therefore responds uniquely to different economic changes. So in this grand financial buffet, sample from every table out there. With a diversified portfolio, you're only setting yourself up to dine out on success even amidst the 2023 recession. Section 3. Dividend Aristocrats. Paint yourself this picture. You're aboard a ship in the rough seas of a storm. Amidst all the chaos, there's one crew member, let's call them Dividend Aristocrat, who's been battling storms for over 25 years. Even though the waves are crashing, he keeps delivering, just like the companies we're about to discuss. Dividend Aristocrats are the unsung heroes of the financial world. These are companies that have consistently increased their dividends for at least 25 consecutive years, showing resilience even in the most turbulent economic climates. They're likely financial endurance athletes, unfazed by market volatility, providing investors with a steady income stream. From companies like Procter & Gamble to Coca-Cola and Johnson & Johnson, these dividend aristocrats are the bedrock of any smart investor's portfolio, especially during a recession. Section 4. Defensive stocks. The world of defensive stocks is the financial equivalent of comfort food. Just like you can always rely on a warm bowl of soup on a cold day, there are certain stocks that have proven to be reliable even during a recession. Defensive stocks belong to industries like utilities, healthcare, and consumer staples. They are the sturdy, dependable players on the field, providing essential goods and services that people need regardless of the economic climate. They're like the tortoises in a race, steady, unassuming, yet often outperforming the hares when the going gets tough. Consider adding companies like Walmart, PepsiCo, or Pfizer to your portfolio. They're like the mac and cheese of the stock market, comforting and consistent. Section 5. Value investing. Welcome to the treasure hunt of the investing world. Value investing. This is where you, as an investor, turn into a financial Indiana Jones, searching for hidden gems in the market. These are the stocks that have been overlooked, undervalued, and left in the shadows. But with a little bit of digging and maybe the right map, you can uncover these hidden treasures easily. During a recession, there's always a silver lining. Many quality stocks don't get hugely beaten down by the market, creating a yard sale of undervalued opportunities. It's like finding a Picasso art piece at a flea market. Your mission should you choose to accept it, involves identifying these undervalued stocks with strong financials, low debt levels, and a competitive advantage in their industry. The reward for doing this, significant growth potential, and the satisfaction of having discovered a hidden gem in the rough and tumble of the 2023 recession. Section number 6, dollar cost averaging. Imagine you're a surfer, waiting for the perfect wave. You could wait for hours, maybe even days, but there's no guarantee that that perfect wave will ever show up. This is akin to trying to time the market, and believe me, it is just as tricky. Enter dollar cost averaging. Now abbreviated as DCA, the strategy that turns you from a wave-chasing surfer into a cool and consistent swimmer. Instead of trying to catch the perfect wave, you just swim a set distance at regular intervals, no matter what the ocean is doing. In investing terms, DCA means investing a fixed amount of money into the market at regular intervals, regardless of the market's ups and downs. This way, you buy more shares when prices are low, and you buy fewer shares when prices are high. It's kind of like setting your investment strategy on autopilot, cruising smoothly through the turbulence of the 2023 recession. Section 7, invest in yourself. Now, let's talk about the most profitable investment of all, you. While the recession may indeed cast a shadow over financial markets, it shines a spotlight on the often ignored asset, your skills, knowledge, and potential. A recession can be the perfect time to explore new horizons by learning a new skill or even kickstarting a side hustle. It's like turning the spotlight onto yourself during a blackout. You would be amazed at what you end up finding. You could have always dreamed of becoming a coding wizard, or perhaps putting your culinary skills to the test and being the next big thing in the food blogging world. Investing in yourself not only boosts your self-worth, but also your net worth, your confidence, and it opens doors to new income streams. In the face of this 2023 recession, remember that you are your most valuable asset. Section 8, avoiding panic selling. Let me paint another scenario for you. Imagine you're at the cinema watching a very suspense-filled thriller, and all of a sudden there's a power outage. It's pitch black. Do you run out screaming, or do you stay put knowing that the power will eventually come back on? In the financial world, panic selling is basically the equivalent of running out of that cinema. It's a knee-jerk reaction to a very temporary situation. Sure, recessions can indeed feel like a never-ending horror movie, but history shows time and time again that the lights do come back on eventually. When markets tumble, it's crucial to resist the urge to sell in panic. Remember, you only truly lose money when you sell your investments at a loss. Instead, think of market downturns as temporary power cuts. They are unsettling, yes, and annoying, yes, but they always end. Stay patient, stick to your long-term investment plan, and remind yourself, this too shall pass. Let's weather the 2023 recession together without letting panic lead the way. Section number 9, staying informed. In the game that is investing, knowledge is your power-up. Just as a good chess player anticipates their opponent's moves, a savvy investor stays ahead by staying informed. With the 2023 recession in full swing, having the right information at your fingertips can make all the difference. Picture yourself as a financial detective, sifting through news, spotting trends, and piecing together the economic puzzle. Subscribing to financial news outlets, following reputable financial analysts, understanding government policy changes. All of these are clues leading you to make informed investment decisions. With each piece of information you gather, you're not just staying in the loop, you're actually creating your own loop. A loop that keeps you one step ahead in this dynamic and ever-changing economic landscape. Section number 10, seek professional advice. Imagine you're on an epic journey facing uncharted territories and uncertain weather. Would you not feel safer with an experienced guide right by your side? This is exactly why in the midst of this 2023 recession, seeking professional financial advice can be a huge game changer. Financial advisors are like the Sherpas of the financial world. They have scaled these economic mountains before, they know the best paths to take, and they can help carry some of the literal weight off of your shoulders. They provide personalized guidance based on your financial goals and risk tolerance, helping you to navigate the foggy valleys of a recession. Yes, we acknowledge the journey can be daunting, but remember, you don't have to go on the journey alone. Reach out to a financial advisor, strap on your boots, and let's conquer this 2023 recession together, one smart financial decision at a time. And there you have it, your survival guide to investing in the 2023 recession. Remember, while a recession can be a challenging time, it's also filled with opportunities for those who are prepared for these opportunities. If you found this video helpful, don't forget to like, share, and subscribe to our channel for more insightful investment advice. And if you have any questions or topics you'd like us to cover in future videos, let us know in the comments below. Let's chat.